Good evening, everyone. This is Dr. Ghosh from Indian Chamber of Commerce. We have with this is the welcome to the 25th show of ICC Biz Live, and we have with us. And today's topic is BFSI Management, a C-suite view. And who better to tell us about that than Madam Padmaja Chunduru? She was the former MD of Indian Bank as well as the former MD of NSDL and now presently engaged in many sectors for many organizations. Ma'am, request to introduce yourself a little bit.
Sure. First of all, thank you very much for having me on this show. This is probably the first time I'm doing something like this, and the subject was very interesting, so I took it up. I'm basically a banker with 35 years experience in SBI, and later on I moved to Indian Bank where I served for 3 years as MD, and then to NSDL where again 3 years. So after that, last year I retired from NSDL, and now I am on a few boards across diverse sectors. I should say it was, I was interested in learning more about various other sectors apart from banking also. So it is like technology, real estate, private equity, insurance. There are or clearing and settlement and chemical manufacturing. One of them is a manufacturing firm. Two are listed companies. So it's giving me a lot of chance to learn and also contribute.
Yes, you are a lifelong learner. Are you with IRDA?
Yeah, yes, I am on their advisory board. Yeah, they have
Okay.
a advisory committee, and I'm on that. Yeah.
Okay. Now, my I will go on to the technical questions. In your vast experience of your 35 years, can you explain how, can you describe, not explain, how BFSI has evolved over the last 20 years as a banker? Reports suggest, in fact, my own research also endorses the same. It has been one of the fastest adopters of technology, achieving more with less manpower and increasing profitability. Fast adoption of technology in financial services, both in fund-based and fee-based activities, have led to the birth of the word fintech. Now, what is fintech? Rather than I explaining, I would request you to explain. One is first how has BFSI evolved, and then some simple explanation on fintech.
I think all sectors of life and all sectors of economy have gone through a very rapid change in the last 2 decades or more. So I think ours, at least mine, is a generation which has seen a lot of change in the both the professional and personal lives. Uh, especially coming to BFSI, I think we have seen days when it was manual, then it came into computerization, and the early 2000s, computerization had stabilized. But to the extent that it is now, internet banking, mobile banking, all this was in the process at that time. But I think the major changes that have happened and also have, sort of facilitated other changes is the guardrails or the platforms that have been built by the government, especially the JAM Trinity, as we know it, the Jan Dhan, Aadhaar, and mobile. The penetration of mobile services across the country, the low cost of data, the affordability of mobile phones across the population, I think that has triggered the awareness about finances and also the urge to have accounts, manage your money and all that, and also the mandate from the government to open the Jan accounts. Today, if there are more than 70 crore Jan accounts, and all of them are, I mean, the average balance I heard is about 5,000 now. At that time, there were concerns that these would be zero balance accounts. I think that also triggered that Aadhaar triggered that basic KYC. I mean, that it can be done digitally and accounts can be opened in a simplified format. So this actually triggered the whole other vast value-added services that came on top of it, whether it was insurance, mutual funds, all the other financial services that are now being, very easily rolled out across the spectrum. So that I think is the basic, change that has happened, or the very good innovation that has happened in India. A lot of new products, a lot of new technologies have been adopted. Technology is only an enabler to, use to bring better customer use cases, better customer experience. Technology is not an end in itself. We have seen many startups with very good technology, but not taking off because of the lack of adoption, where there is no use case that supports that particular technology, or it is ahead of its time, like blockchain was when it first came, but now it is being adopted across the spectrum. So I think there is a that was a one major uh, input. The other one is about lending. I think banks, though they were well intentioned, the kind of penetration that was necessary in India with its vast geography was not possible just with banks. These lending fintechs, as we call them, when we say fintech, let me explain. I think the fintech is nothing but the same services that a bank or an insurance company or a mutual fund is providing. It is being provided at scale with a digital platform, and hence these are complementary to the services that banks or other institutions are giving. And so there's a lot of collaboration possible between these companies. Like we see a lot of opportunities for co-lending between NBFCs and fintechs, or NBFCs and banks. I think there has been an explosion of such experiments across India, and now it is being stabilized. The other aspect has been the payment services. Again, thanks to UPI and I mean again NPCI, the kind of growth that we are seeing in payment services, both whether it is domestic, whether it is wholesale, retail, or even cross border. The innovations that are happening that give much more better service to customers at a lower price is really very impressive to see. I think that these changes will continue as long as the customer keeps demanding better service, lower price, and India also offers the advantage of scale. So unless you drive the volumes up, the returns may not be so forthcoming. So I think scale and the network effects coming into play is very important for this fintech. So fintech is nothing; it's not a new company. I think every bank is a fintech today. Every insurance company is a fintech, which is offering its services on a digital platform. There are pure fintech companies also, and there are fintechs that are collaborating or partnering with regular traditional institutions to reach the last mile. I think the government, through its whatever we call digital public infrastructure, and also the RBI and other regulators have played a very key role in letting the innovations grow or foster well, but also at the same time keeping a very tight watch on it to see that it doesn't go overboard. And the basic tenets of trust, transparency, investor protection, or depositor protection are not compromised. I think it's a tightrope walk for regulators also, but I think they deserve credit for bringing the economy at such a fast pace to such a extent that today our digital banking is probably far more superior to many developed economies. I've worked in the US, and we have seen the way the checks, check truncation was already in India when we were still processing checks in US. So there are certain areas where we can leapfrog and actually set an example to the rest of the world. I think it's a win-win for both the industry and the economy that such a innovation has happened. Thanks.
So the learning I key takeaway for me is powered by technology, banking penetration or rather BFSI penetration has increased a lot in this country, and it is the same service to technology which is fintech.
True.
Okay. So now, another key takeaway if, for me is that the technology is an enabler, and if the business model has to be sound for technology to help it to grow. if there's something wrong in the business model, technology can do nothing.
Yeah. As I mentioned, now there have been new types of services that have been started, like account aggregators, ONDC, e-commerce platforms. I think these are again, felt need. And the issue of sharing privacy, of sharing private information, financial information was a key concern, and especially with the kind of data privacy acts that are coming in developed economies and even in India. I think that was this account aggregator framework which came about has helped in really expanding the penetration of lending or even other aspects. So it's how we assess the requirement of the customers, where is the pain point, where is the need, and then address. Sometimes, so yeah, what we start today may not take off today, it may take off after 4 5 years, if sometimes the entrepreneurs are ahead of their times. So that's also an issue.
So, ma'am, what is the current scenario in NPA management? We in 2008, when the US crisis hit, we learned that some organizations were too big to fail. So some that, and even government of India had been following that, and they bailed out banks either through equity infusion or through merger with other banks. So, what is your opinion on this? And what is the current
Yeah,
scenario?
I've lived through those years in State Bank of India, especially after 2010. There was this, NPA build-up in banks, and there are many reasons for it. I think the economy itself was in a, it was changing. It was fast changing. The types of, industries that were coming. Infrastructure was a big requirement of companies, and it was a requirement of the economy also that we fund. And there were no term lending institutions really coming to long-term loans, to give long-term loans. In those days, there was no long-term institution. IDBI, ICICI both became banks. So it was the commercial banks that stepped in. There was this long-term lending, and the skill set also, project financing requires a totally different set of and due diligence that is required. The kind of information that was available on these projects or how to monitor these projects was also limited at that time. So we can't compare. In hindsight, everything looks, it is easy to decipher. But at that time, given the constraints, I think banks have tried to fill in the gap in long-term funding. Yes, there might have been some, imprudent lending, but that must be a small part because there have been policy changes also happening, like coal mining leases being cancelled, or power agreements being reworked. So the basic assumptions on which the loans were given were also changing, and the banks were, left holding the issue. So I think the AQR, which again RBI had mandated, was the right step. It brought out things quite in the open, and immediately it is to the credit of the government and RBI that they took up steps to address the issue. There was the PCA framework, the prompt corrective action framework on some of the weaker banks, where further lending was restricted except to very needy sectors. Similarly, there was this, the other resolution mechanisms that were started, that were actually empowered, surface seed, the DRT, all these were sort of tried, and as for a restructuring, there were many schemes that came up at that time. Some worked, some did not work so well. Then came the IBC, the bankruptcy code. And that I think, insolvency and bankruptcy, that I think was a game changer. Whatever be its, we can argue about its efficacy, but without IBC, I don't think we would have been here today. With the banks showing gross NPAs of less than 3% today. This kind of situation from 11%, which was at that time, hovering around 2017-18. This is the kind of change that has happened. Yes, some of these schemes worked, but also what worked was the government's equity infusion into the weaker banks. I think the government took a very pragmatic step that this is required, and the bailout of those banks was very much necessary to retain the trust and confidence in the banking system. That is something that is, totally it's a standard that we have to live up to, and that was done. Along with that, governance changes, the change in the the structure of the banks, the way the top management was selected, everything has been sort of spruced up, and I think that has given this good dividends. This was followed up with the merger of the weaker banks with the stronger banks. I think uh, sh- as a majority shareholder, the government has every right to decide on where its capital is best utilized and optimally utilized. It is not necessary that we need to replicate the same services across so many banks in the country. Moreover, we don't have very big size banks to compete with the global banks in the global arena. That is a fact even today, except SBI and probably HDFC. We don't have that level of banks, and even they are not top of the rank. The Chinese banks are. So I think it takes some doing to get there. But meanwhile, this is as a first step. I think the mergers have worked well, and the proof is there for all of us to see. And these are the major steps I can recall that the government at that time has taken. Yes, we all went through a lot of pain and doubts and second guessing and all that. But 6 years, 7 years down the line, we see the benefits. So yeah.
Ma'am, you were one of the key persons in managing the mergers, whether SBI or Indian Bank, Allahabad Bank. Do share some of your experiences with our members and our viewers who are seeing this show.
Uh, I think it's what about 5 years now from the Indian Bank merger. SBI, I was more, I was not handling the merger per se, but yes, the accounts that moved from the subsidiary banks or the associate banks to SBI, those were being merged, and we were handling those accounts. But my first-hand experience came from Indian Bank, and
Okay.
the decision of the government was to merge Allahabad Bank into Indian Bank. The major concerns were two very, very strong, I should say, difference in the geographical distribution of branches of both the banks. There was no overlap practically. There were hardly 100, I think, places where there was both the branches were present. Otherwise, 3,000 branches of Indian Bank and 3,000 branches of Allahabad Bank, there was no overlap. So automatically it became double the size. There was not much scope for rationalization of branches. Secondly, I think it was the culture. You come from Calcutta. Calcutta-based bank and Madras or a Chennai-based bank, there is a lot of difference
Yeah.
in the way the working happens. So this was a point of resistance, I think, especially from Allahabad Bank. There were a lot of concerns among the staff there. Because I think had they merged with a very big bank, maybe they would have felt much more comfortable. But being merged with an equal sized bank, and that too, a bank which they don't really overlap anywhere, it was a bit of a concern for them. So I did as many roadshows and as many meetings with Allahabad Bank teams before this COVID hit us. This was announced in August 2019, and we immediately started the process. But by December, January, COVID was already
Mhm.
raging, and
Right.
we had to switch to the video or the online format, and that was a big challenge. At the same time, we had to run both the banks till the last day simultaneously. There was the need to keep the customers of both the banks also informed, also comfortable, so that they don't walk away. There was a lot of such concerns, but I think the biggest help or the biggest support I got was the best teams from both the banks. I don't know how it worked and what made, but two things I can say that one I decided was communication. Communication with the employees, communication with employees of both the banks, communication with the customers of both the banks, customers of Allahabad Bank especially, because they had a lot of corporate loans, and we had to, talk to those. I picked up the phone and spoke to a lot of corporates directly to allay their fears, if any, that Indian Bank would not be as supportive as Allahabad Bank. I told them that's not the case. Even governments, UP, West Bengal. I mean, we went and met them so that we retained the Allahabad Bank positives, which was a high CASA, very good PCR. There were many pluses apart from the usual challenges that emerge. But the biggest, I think, was the communication with the employees individually, in groups, in teams. I don't know how much I would have talked in those 2 years, to how many people. And this was also when COVID, we were losing people to COVID. The banks were essential services. We had to run the branches every day with 40%, 50% attendance, whatever we could do. And, but many, I think it is things happen when we really work with good intentions and work with a very positive mindset. Things do fall in place. The Reserve Bank, the Ministry of Finance, the RBI, everyone supported us when it was required. In fact, the finance minister visited Indian Bank during this period. She was in Chennai, and so she came to the headquarters and she addressed the staff, and that was a big morale booster for the people.
Okay.
I think these sort of things, small gestures also go a long way uh, in enthusing people to the end result. IT, the until the last day when the last piece of IT fell in place, and next day we opened all the 6,000 branches with a single screen for IT for the system. I think it was a very seamless integration, and all credit to the staff. Again, both Indian Bank and Allahabad Bank, we had a transition integration management office, which was managed by a very good team, and I think it's the
So
proof is there to see. Uh,
what was your bigger challenge? Human resource management or financial service management in this merger of two banks?
I think it was not a challenge, but I think it was a very, yeah, I thought, no doubt, it is the HR that is the biggest concern. If you don't have your people, the buy-in of the staff, then everything else you do will not work. And even in this day of technology, AI, ML, whatever you talk, I think if the people are not with you, managing such a change and such a transition is not going to work, because there should be that motivation, there should be that commitment from the staff, and that can come only when you are transparent in your communication, and you say what you do and you do what you say with the staff and with the customers.
What
Otherwise
is
it
it?
doesn't
Walk
it
the
doesn't
talk.
work. Walk the
What?
talk. And actually, our merger case study merger became a case study published by Harvard Publishing, so it was the first such case study of a public sector unit from India. And that was also a very matter of pride for all of us in Indian Bank. Today, the bank is doing so well. So I am very proud that, whatever foundation or
Do you have
whatever
that
structures.
covered case study with you? Can you share it with us?
Sure, I will email it to you. I think it's
Okay.
there on the Indian Bank website also, but I will send it to you
So,
separately.
okay, fine.
Thank you.
Now, you mentioned about IPC and stressed asset management, but IPC is going through a lot of reforms. I mean, yeah, how well are we doing in stressed asset management as a nation
Um,
on a macroeconomic view?
Yeah, I think IBC, as I said, it is an idea, it is an initiative which was long overdue, and it has been set up very, very quickly. The process took some time. The initial resolutions were not very encouraging, because very big companies were first handled through IBC, and the whole system was just falling in place at that time. But I think with the companies like SR Steel, Bush and Steel, of course, it went through some, ups and downs. But again, now I think all is fair. So with these resolutions, I think even the bankers got a lot of confidence. And if I can say, I think many people have said this, and I have experienced this. The biggest positive from IBC is that is that people uh, and do not want to go to NCLT, the borrowers. So that itself was a big plus, because automatically the power or the bargaining strength shifted to the banks, which was not the case earlier. The moment a big account became NPA, it would always be a challenge to get the promoters or the or the key decision makers on board with the process that is required, and that's why the huge delays in the earlier processes. But the moment NCLT and this resolution and also the visibility about this whole process, the transparency, even the newspapers were following what's happening. The committee of creditors was empowered. Yes, but it went through some very difficult times. It's not easy to recover from old NPAs, because the asset value erodes over time. And
Okay.
the moment the asset is not valuable and there are not many bidders, then there is a problem. If I think going forward, IBC will be better positioned, because now the cleanup has happened. Now the banks do not have too much of a flow into NCLT, and there is a bad bank or what NIRCL which has been set up to aggregate the loans of different banks of the same company, of the same corporate, and resolve it. So I think there are many small steps that are going. I also heard that IBC is planning that 51% of the creditors, if they decide, then they can take a company to NCLT. These are the changes that are being proposed.
Okay.
The other one we were talking of is this pre-pack, that you work out with the company beforehand, then take it to NCLT and get their blessing to the. This is what happens in the US and all bankruptcy proceedings, right? I think all these are in the offing. So I think it's a mixed success, but there's a lot to be said that IBC has changed the game, and creditors especially, I think, feel much more empowered today,
Okay.
and that would also make them much more open to giving more loans, because this system is there that if something goes wrong, we have a backstop. We can go to NCLT, we can recover our money. But if that is not there, and if it was the old days, then it would have been much more difficult for lending to large corporates.
Okay. So, how are you managing farmer loans, which if they delay in EMIs, are you extending the lending period? Some microfinance lenders have reported that they have reworked and extended the loan period. How are you this problem has been acknowledged, that farmer loans are not treated that well as corporate loans, but somehow some solutions are being worked out on in this sphere. Can you elaborate a bit on farmer loans
Yeah. Yeah,
and
I think the
defaults?
farm loans, farm sector reforms, all this is a very big subject to be handled holistically. But coming to farm loans, in particular agricultural loans, I think right from the, you mentioned how corporates are being treated and how farm loans are being treated. Is there a bias towards corporate loans or something? I don't think so. I think right from the inception, farm loans are small loans. These The delegation of powers is to the branches. The branch managers can give these loans. Corporate loans take a lot more due diligence, a lot more time.
Okay.
The second part is that a recognition of an NPA in a farm loan happens because the repayment schedule of a farm loans are aligned with the crop cycle. If the crop is less than 1 year, if the crop season is less than 1 year, then there are two crop seasons overdue period that is allowed. That means 2 years.
Okay.
Whereas for a corporate, 90 days means 90 days. RBI's norms are very strict. The 91st day, it becomes an NPA. In crop loans, for more than 2 years, it is again 1 year, one crop season. So you get 1 year at least. So I think the in crop loans, the reckoning of NPA itself is delayed or deferred. in some sense. So because there is time for the farmer to come back and regularize his account. That is one thing. There is also a dispensation that government normally comes up when there are natural calamities or other incidents that impact the farm loans. And even
Like
banks,
Fasal Bima Yojana, like.
there is an insurance for Fasal Bima Yojana. Even otherwise, there have been instances in the past when this insurance were not there. But when some states were hit by farm, this natural calamities, flooding or famine, I think there
Okay.
have been subsidies, there have been interest waivers, there have been so many such concessions that have been offered from the government side. And banks have also, restructured and given replacement. There have been many such instances. This is always a ongoing, debate that are we doing enough for the farmers? I think, despite all these steps, it is still an ongoing process. But comparing it with corporates may not be the right way to think of it. This is a problem by itself, which is to be addressed with all the focus. Corporates are a problem in another way, but now I think that has the formal reforms and the structures in place. How we utilize them, how we empower the NCLTs, how we build the infrastructure to implement this is the question. But we have the rails in place. In the farm loans, I think there is still some work to do, and the government seems to be addressing that.
But according to you, we have a soft attitude towards farm loans. That is as a takeaway from now. Coming to one very recent news that the GDP has grown, but uh, so there is a fall in non-food credit. I mean, how do we? I am an economist. How do I reconcile these two? Does this mean that? And there's also data of capex in economy uh, going up. Does that mean that capex is being driven by more by government rather than by the private sector? Or
Okay,
what is
yeah, the
happening in
first
the
quarter, first capex. I think,
capex, GDP growth, and non-food credit? How do we reconcile all this?
okay. Um, No, I'm no expert or economist, but I will try to give what I understand of the uh, three factors that you have mentioned. GDP in the first quarter has really, I think, uh, exceeded expectations.
Right.
Partly maybe because of this exports and all being front loaded because of this tariff issues. There has been some. Maybe it will get more evened out during the next 3 quarters. That said, I think yes, especially after COVID, the capex has come most from the government. Understandably so, because the corporates were really, looking at what would be the kind of situation. Should we invest? Should we not invest? What would be the government's what would be their what would be their policy towards corporate lending? Will there be any SOPs coming? So government has invested heavily in infrastructure, power, roads, and all these areas. I Yes, corporates have been sort of restrained in their investments, I should say, but not all sectors. I myself see that a lot of investments are coming into the into data centers, for example, into the construction sector. So
Okay.
there are some steel. There are some industries that are still attracting private investment. Other reason could be that the capacity utilization of the private sector is only, average 70-75%. So, one study says that unless it's 80%, fresh investment will not be so easily coming in. I think the other reason we can look at is how is the corporate bond market. We are looking at only the bank loans as a mark for what is the investment in the by the private sector. But there are a lot of the corporate bond market has been doing well with RBI reducing the interest rates and all. The transmission in the bond market has been faster than the loan market, and also the compliances, whatever, especially for well-rated corporates. I think the bond market has been quite attractive. It is now what, about 54 trillion rupees against the banks. It is about, still the banks loans are 3 to 4 times the corporate bonds. But that's one source of funding that is coming. Also, despite the rupee being where it is, so I think the upgradation in our rating of the country has increased the ECBs for the corporates. So they have been now borrowing abroad, especially if they have a natural hedge in terms of exports and all that. So that also is one area. There is another AIFs, private credit. There are so many streams of funding now for corporates, not necessarily just bank loans like the traditional. If we aggregate all this, maybe it won't look as bad as it seems to be. But I take your point that, and I agree that, and even the minister, everyone has been sort of exhorting the private sector to invest, to look at fresh, greenfield, brownfield projects. So that taken, but these are my thoughts on that.
Now you talked about the bond market. How is the primary bond market? I think it primary bond market is good. How is the secondary bond market? That very few only bankers like you would know. We had as a student we had learned more as interest rates go down, bond price goes up.
Yeah.
That's what we know. So how is the
Yeah.
secondary
So
bond market?
I am, the secondary bond market has been quite active, but not as, active as you would like it to be. The transmission, as I said, of the reduction in the RBI rates has been quite good in the bond space. The I think SEBI has also come out with a lot of enablers for the bond market. There have been new platforms that even encourage the retail investors to invest in this corporate bonds. With so that I think these are all small initiatives that are being put in place. There is a lot of data that has been put in the public domain about the corporates, about their, about the way their bond structure is. In fact, in NSDL itself, we have developed a blockchain-based. NSDL runs a issuer portal where all the bonds that are listed are the information about the bonds is fully there for
Okay.
for the secondary market basically. And we also developed a blockchain-based platform which was for the security and covenant monitoring of corporate bonds. And this was the first of its kind in India, the blockchain based. It is working now, it is fully operational. And here what happens is that whether the corporate is complying with all the covenants of its bond issue is immediately checked by the debenture trustee and put on the platform. So it is visible to both the corporate and all the investors. So I think this sort of a transparency, this sort of a trust, and this sort of a facility would definitely improve the secondary market as well.
Right, ma'am. Now, regarding bank credit to exporters, in lieu of this exorbitant tariffs of 50%, what is the current scenario? And we are reading media reports that RBI is working on a package to soften the blow. I mean, what what do you what do you foresee in this?
I wish I could predict, but going by, you know, the most unpredictable regime we are having globally, it is really very painful. When I was in Indian Bank, we had this Tirupur, the textiles. And I also worked in a bank branch in SBI, which was into gems and jewelry, diamond financing. So you can see the kind of impact that these kind of tariffs will have on these industries. And these industries traditionally are labor intensive. So the impact would not only be on the stakeholder shareholders, but also on the employees and the employment situation in India. So I think this has been taken up in very right earnest by both the government and RBI. We saw the RBI. I also read in the newspapers that the RBI governor has said that RBI won't be found wanting to address the issues of growth in the economy, while also expecting that these negotiations will go forward in a positive way. Anything can happen any day, so people are just waiting and watching. The other plus point that I saw was that the exporters have assured that they are not letting go of people, and they are just trying to diversify their markets. And I think the government has been also very actively trying to have agreements with other Europe or other big markets in the across the globe, even Asia. So I can't really uh, predict anything, but I'm sure the government would have some schemes coming up for exporters,
Regarding
and
government
banks
schemes,
also. Yeah.
regarding
Uh,
government schemes, today's GST cuts are expected to give a boost to aggregate demand and capacity utilization, and hopefully
sure,
more capex from the private sector. How would
sure.
the BFSI sector benefit from today's GST cuts?
Actually, it's yeah. I too read it in the paper, so it's really very too early to comment. But I think insurance. I saw. I did not see any other sector in BFSI being. I mean, in the paper as of now. Insurance. Yes, they said that there would be nil GST on life and health insurance. So yes, in the hands of the for the ultimate policy holder, I think it's a big plus. I mean, this I'm just doing my own guesswork, because the actual working out of the benefit or the cost to the insurance company is to be worked out. There are various interpretations of these GST rates
It's
and
too
what
early
is.
to predict.
It's
You're
too
saying it's
early to predict, and I think yes, insurance companies will have to work out whether input credit is now what will happen to the input credit that they normally factor into the tax. So that is not very clear. Also, whether I think standalone health insurance companies versus general insurance companies. General insurance companies will have various streams so that they can still appropriate the input credit, but standalone health insurance might still have an issue. So while these are being worked out, I think it's premature for me to make any
I
big
understand.
comments on this.
Very
Yeah.
well understood. On one last question on insurance. PSU health insurance companies are much more customer friendly than private health insurance. That is something common we hear. In any comments? I mean, I mean, if you are uncomfortable, you can leave this question as well.
No, no, there's nothing about it's an opinion, right? I mean, and everyone is entitled to their opinion. I'm very happy that PSU companies, I mean, they are faring well in the claim settlement, because I was also with the PSUs all along. And yes, but now that I've also seen the private sector insurance companies function, and their claim settlement ratios are equally good. The public sector claim settlement ratio is not readily available, whereas the private sector I could get, and I saw that most of the major companies are 97%, 98% or above. There would always be one or two stray cases where there could be some issue, which also are very publicized or very sensitive, so they are publicized in the newspapers and all. But I think in general, private sector cannot lag behind, because otherwise they would not be able to maintain their market share and retain
Right.
their, and if you see the kind of ratios, whether it is the combined ratio or the grievance redressal or grievance ratio, these are faring very well. In fact, the government is also coming up. I think most of it is because of the fragmented way the information is coming. The government, I heard somewhere, was talking of a national health portal where the insurance companies, the health insurance basically, health insurance companies and the hospitals will be all empaneled on the same portal. So there'll be transparency and visibility about claim settlements. And there are very strict, IRDA is coming up with very strict norms about pre-authorizing a hospitalization or even the discharge from a hospital within hours or minutes. So they are now coming up with those rules. IRDA is being empowered to give a lot of such mandates. And I think this is another sector rife for reforms. There is too much disconnect, I should say, in in the insurance segment. In fact, the GST can have a very good impact if the medical equipment and medicines. So there is some reduction in the GST rates for that also. So if hospital rates come down because of this, then the insurance premium, then the everything is positive spin-off from that. I think all this is evolving, but in the right direction.
Coming to NSDL, how has the settlement system moved from? You see, I have been personally an investor from the time Sensex was 3,000. So and now today, and about one time it was 87,000. Now today is 81,000, something like that. How has the settlement system moved from T plus 3 to T plus 0 over the years? And how come T plus 0 and T plus 1 both coexist? Aren't we following only one system?
Okay. You said you have been investing from a long time, so you must be a multimillionaire by now. I hope. Right? Given the way the stock market has performed in India. Uh, Coming to NSDL, I think, this transition from T plus 3 to T plus 2, T plus 2 was done in 2003. And in the last 2 decades, it was a steady state. It was going with the T plus 2 and things were okay. And now the decision to shift it to T plus 1 was taken in September 2021. I was very much there. I joined NSDL in September, and that was when this came up. So immediately the timelines were very stiff. It was to be fully rolled out between I think January 2022 and January 2023. But what I saw there was initially there was lot of resentment, lot of friction, and lot of concerns that these sort of volumes, our MII infrastructure, this market intermediary institutions, our NSDL, CDSL, clearing corporations, they won't be able to handle. There are too many players in that chain, and if any one weak link is there, it would all go for a toss, and we can't afford that. That was one concern. There was also concern from the FPIs about their forex, whether they have to pre-fund, which would be a very big no for foreign investors. There was also the question of, which stocks to put and how do we test the system. It was all a big issue, but SEBI, again, and NSDL, CDSL, we all engaged almost continuously with all the stakeholders, took all their concerns. The system upgradation was also a very big part of it. The back office vendors were also consulted so that the IT has to, first enable the whole thing. So, drawing up those policies, processes. Another good thing that SEBI did two things. One is it made a glide path. It started with the smallest market cap companies, the bottom 100. Then you slowly go up the ladder, and every month I think 500 companies, and then in January 2023, if I remember right, January 27th was the last batch of companies, the biggest companies that came on board. And by then we had learned the system, and mid course corrections happened. So this glide path, actually the FPIs came into play only in the last stage, because they invest only in the biggest companies, and the smaller companies we could handle. The other thing that was done was the time for settlement for FPIs was changed to 7:30 a.m. on the T plus 1 day. So that helped a lot. All this meant a lot of churn, a lot of change, a lot of thinking, and evolving for all the players. From NSDL, I think our team, especially whether it was the operations team or the IT team, they all came together, brainstormed, and came up with solutions for all these things. So it was again, I always hark back to the HR part. It is the people. Again, there was no AI involved in this. It was a purely human intelligence, and they did it. So that was, as far as T plus 1 was concerned, it stabilized. In no time, SEBI also came up with T plus 0. Now this is instant settlement. So after a lot of discussions, it was decided that it would be made optional. And so it is still optional in a way. It is being slowly introduced for the smaller companies. But T plus zero means any transaction trade that happens up to 1:30 on that day would be settled on the same day, uh, by say 4:35. So there are and T plus one was continuing because not all stocks were eligible for T plus zero. For T plus zero, there were only 200 or so stocks, the bigger companies, which were eligible. And however, the volumes were, I think, even today, are still not there. They are low in T plus zero. Whereas, the same 200 stocks were also eligible in T plus one. So it was again a system upgradation that was required. It is running today, but still the system has to evolve, and we have to wait for SEBI to decide on the path towards T plus zero. Till then, I think these two are running quite well. Most of the trades do happen still in T plus one, and because it's not very efficient that way in terms of the market, the brokers having to maintain so much system, and there is a lot of resistance from the market, and that slowly is being resolved.
I still have some questions, but ma'am, let's open the floor for public questions. Those who are
Oh, yeah.
hearing can please type your questions to ma'am, because not every day you will get an opportunity to talk to her. Please, Bharat Gupta, please ask your question. But before that question before questions come, my question is on off-market transfer. If I wish to transfer some of stocks to my wife, why do I need the consent of the company or no objection certificate? What is the role of the company in my if I give some gift to my wife or to my daughter?
Okay, this is off-market transfers, which are unlisted private
Earlier,
companies, usually the shares. I understand.
earlier
So
we need NOC from the
earlier it
company.
was not there. Yeah, recently I think the depositories have issued this circular. So the issue is that the Companies Act mandates that a private company have a maximum shareholder limit of 200. Now the responsibility of having maintaining that limit and not crossing that lies with the company. It is not possible for NSDL or CDSL to or any depository to really monitor and keep track of that. So there have been instances of transfers, and then later on the company not registering the new shareholders because it did not meet their approval. Now this was leading to a lot of issues, even court cases and all. So the decision was taken that until the company's NOC will be required for any off-market transfers before the transfer is effected in the depository system. This, I think, is more towards compliance with the Companies Act, rather than
Companies.
something
Okay,
unilaterally
I get
done.
it. Get the logic.
But I also understand that the depositories are trying to, because AIF is another, their units are also now dematted, and they also keep, there is a transferability restriction on AIF units. Now, there also the AIF has to permit the transfer. So now NSDL is developing, I understand that the depositories are developing a platform where again the companies, there is already the issuer portal, as I mentioned, that would be enhanced to pass these requests of the investors immediately to the company, and the company will also authorize online, so that this friction is reduced and the timelines are also maintained in a much better, efficient way.
Anyone can raise their questions openly. The platform is open. Uh, Another question is that nowadays, if I have to plan to buy a stock, I have to pay the full price in advance. Previously, I could pay after placing the order. Is this the change in T plus 3 to T plus 1 that has makes me pay full in advance.
No, that is not related to T+1. It is more about the IPOs. I think the new shares, if you're buying, these have to be funded through the ASBA mechanism. Because in retail, it is very difficult for if there is a settlement problem, if the funds are not available and the company has to go ahead and list its shares. So this is not possible to run after so many small investors. It's a risk, that a default risk that is very much there. So the
Okay.
pre-funding or at least the blocking of the amount in the savings account is something that is mandated by SEBI. And I think it's being followed without much of a issue. Whereas in the secondary, in a normal trade, you can always do it on the T+1 day. In fact, T+1, you can fund it on the day of settlement, not upfront. Only in IPOs it's required.
Okay, the viewer feedback so far now is that all questions are being answered by you, so they have no added questions. And
Thank
so
you.
the last question of the day: what is the NSDL role in derivatives? Is NSDL both in the currency and equity derivatives?
And NSDL actually handles only the securities for demat and for transfer between demat accounts. In case of equity securities, if there is a margin pledge or if there is a delivery, then NSDL comes into the picture. Otherwise, options and these are only derivatives, are only contracts. Unless they are covered by an underlying stock, there is no need for NSDL to come into the picture. So in
So
equity derivatives, only if there is a delivery and or if there is a margin pledge, then it comes. In currency, the settlement is totally cash settlement. So there's no role for NSDL, except again if there is a margin requirement or a margin pledge, in which case it comes into play.
So, are equity derivatives bought and sold in National Stock Exchange or Bombay Stock Exchange or both?
NSE. NSE
Oh,
is the major market for
NSE is major.
NSE
Okay,
is the world's biggest options exchange. The
oh,
volumes are the maximum in NSE. Yeah.
that is all for the day, ma'am. Thank you very much. It was a very illustrative session. I'm sure that the people with me enjoyed and do mail us that how what case study.
Yeah, I will. So thank you very much for giving me this opportunity. It made me also, think of a lot more things. Otherwise, it would, it really gave me a lot of fodder for thought. Thank you very much for your very nice session. Thank you.
This year April I be 11 I became a doctorate. My topic was AI and automation and then AI automation and employment and economic analysis.
Oh, that's very interesting. I mean, it's a very interesting topic. Must be. Maybe I can, if you have
Came in
you can
Scopus
share
Journal.
me. Yeah, congratulations on that.
I
Very
will
nice
share.
to hear.
I will share two of my publications in international journals with you.
Sure. Sure. Thank
Okay,
you.
ma'am.
Thank you very
Thank
much.
you.
Thank you. Thanks
Thank
to
you.
all the viewers. Thank you.